Hi everyone, welcome to class. And today's topic is journal entries, the language of accounting. Now, imagine running a business and someone pays you 20,000 naira. How do you tell the accounting system what happened? How do you record it? That's where journal entries come in. Every business transaction begins with a journal entry. Your first step of identifying what just happened and putting it down on your record so you remember the transaction is called a journal entry. Now, what is a journal entry? A journal entry is the first official record of a business transaction. The first official record you keep of anything that happens in your business is a journal entry. It tells us which accounts changed, whether they increased or decreased, the amount involved. Think of it as writing the story of every business transaction, keeping track of everything that happens in your business. Every journal entry has two sides. Every journal entry has two sides. It must have at least one debit and at least one credit. It must have at least one debit, which means it could be more than one debit or more than, but it must have at least one debit and one credit. And total debit must be equal to total credit. Always, both sides must be equal. The entry you make on the debit side must be equal to the entry you make on the credit side. It must balance, no exceptions. Before you enter any journal entry, before you record anything in your journal, you must ask yourself these three questions. What happened? Ask yourself, what happened? And then which account change? Which account is affected by this thing that just happened? Should each account be debited or credited? You must ask yourself these three questions. Don't memorize it. Don't memorize it. Just understand. What happened? Which account is involved? And how did it change? How was it affected? Now let's look at some examples, some case scenarios. Debit supermarkets. Now, debit supermarkets, a business purchases inventory worth 3,500 naira on credit. Inventory are the goods that they intend to sell. Now, if they purchase these goods on credit, ask yourself, what happened? What happened? This is a transaction. What happened? Now, inventory increased. From this transaction, our inventory increased. What we intend to sell increased. Something else increased. What is that? Your accounts payable also increased. You got it right. This is the amount you're paying to people that you are owing, your suppliers. Now, you've asked yourself what happened, and now we've already determined how accounts has changed. We've said inventory increased and accounts payable also increased. Now, what account is to be debited or credited? Remember, inventory is an asset, and we said what all assets increase on the debit side. So inventory will be debited with 35. There must be a credit entry. Which account is credited? Accounts payable will also be credited with the same amount, 3,500. Let's take another example. Sunrise Cafe. Let's say Sunrise Cafe is based in the US. A customer of Sunrise Cafe who owed the business $1,200 pays finally. Now ask yourself, what happened? From this transaction, what happened? What increased? Which account is involved? Did it increase or did it decrease? Now from this, we can see that cash increased. They received cash. Okay? What increased? What else increased or decreased? Accounts receivable decreased. That means the amount you're expecting to collect from their debtors reduced because one has paid his debt. Now, having determined the account involved and how they increase or decrease, now how do we put it in the journal? Which account is to be debited or credited? If cash increases, remember cash is an asset and it increases on the debit side, so cash will be debited. An account receivable, which is also an asset that increases on the debit side, but in this transaction, account receivable decreases, so it will go to the credit side. Our final example for today, Elegant Fashion Store. Now, Elegant Fashion Store pays an electricity bill of $450. Now, ask yourself, what happened? Which accounts are involved? Which account is to be debited or credited? Electricity bill, electricity expense increased, that is, and cash decreased. Now from this, we know which account is to be debited and credited. Remember we said expenses increase on the debit side and cash increases on the debit side. But since cash is reducing, it will be recorded on the credit side. So from this, we establish that an account that increases on the debit side, whatever reduces the amount in that account will be recorded on the credit side of that account. That is how simple it is. Now, common beginner mistakes. Many beginners ask, should I memorize journal entries? The answer is no. Understand the transaction, understand the account type, understand whether it increases or decreases. Then the journal entry becomes obvious. Let's have a quick practice. A business pays 500,000 naira cash for rent. Now, think about this. Can you identify which account changed and which account is debited or which account is to be credited? Now, our answer. The two accounts affected are the rent expense account and the cash account. Now, what will be our journal entry? Rent expense account increased. Remember, our expenses increase on the debit side, and so you record it on the debit side, while cash decreased. So if cash decreases, it will be recorded on the credit side. Why? Because cash increase is recorded on the debit side. So if it is reducing right now, it will be on the credit side. This is how you record journal entries. Remember, accounting is easier than you think. Don't worry about mastering hundreds of journal entries overnight. Focus on understanding the logic behind each transaction, and with practice, journal entries will become second nature. If this video was helpful, like and subscribe to Learn with Debbie. I will see you in the next lesson.